With stocks finishing the Wednesday session lower today. Just four industry groups up on the day. Retail, insurers, real estate, oil and gas. The rest lower, falling as the euro gains highest level since January 2015. The benchmark down for the fourth day in 5. Stoxx among the banks reporting today. Shares earlier falling as much as 4.9%, biggest drop in a year, now down a mere 3.9%. Its continued struggle with litigation for past misconduct overshadowing a jump in demand for structured products and a brighter picture for consumer banking in Eastern Europe. Appetite for structured products helping the firm's trading revenue drop less than many of its peers, who of course are in deep overhaul mode, such as Deutsche Bank. Stoxx is still dealing with the legacy of past alleged misconduct, including a US probe into violations of trade sanctions. France's third biggest lender increased legal provisions by 300 million euros for disputes that it didn't actually specify. The higher legal charges helped push net income down by 28%. In line with estimates, not enough to boost shares today. Sticking with matters of a French nature, Natixis shares unchanged on the day. They were higher earlier, setting the bar high for French investment banking and asset management rivals. Net income at the global markets division soared about 20% in the second quarter. Natixis, with Jones Harris Associates and Loomis Sayles in the United States, also says it's taken about 9 billion euros of new money at its asset management operations globally. Net income also beat estimates. Laurent Mignon, the chief executive, is leading the push into Asia and the US, into areas such as advisory for mergers and acquisitions and capital markets. Trading revenue, by the way, at Natixis compares with a drop of almost 10% at the top 5 US investment banks in the second quarter on aggregate. And as if you didn't have enough of banks, Standard Chartered 6% lower today. Chief executive Bill Winter's overhaul of it has stalled, it seems. The emerging markets focused lender fell the most in almost 9 months today, one of the big fallers on the Stoxx 600. The chief executive sounding caution about growth prospects, blaming extraordinary uncertainty around regulations for a decision not to reinstate the dividend. There's where the disappointment lies today. The comments overshadowing a second quarter of revenue gains and pre-tax profit that double, biggest decline since March, should I say, 2016, Vonnie.